My name is Stefan Hines. I'm the founder of the Wealth Development Project, and today we're going to be talking about cash flow. This is my Grant Cardone hat, cash flow, all about the cash flow. So I've been getting a lot of questions about what strategies should be used during the recession coming. Personally, I'm all about cash flow. I'm there for the passive income. There's multiple strategies that you can utilize, and there's going to be a lot of opportunity popping up where you can do wholesaling and a lot of opportunity for you to do fix and flips, but I'm all about that cash flow. When I purchase properties, I don't look at it as just buying a house. I'm buying a stream of income, and this stream of income is for a lifetime. I firmly believe in building a foundation first before anything. I mean, it's all about generational wealth. I mean, I'm looking to build things to hand down to my heirs, future generations, my children, and my children's children. So I know a lot of us, we have a dream, some of us the American dream, and some of us, we just want to leave our jobs and we want something solid to do. We want to follow our passions. Now, if you want to walk away from your job, I'm sure you're not going to want to walk away from your job to something that's uncertain. So we want to use real estate as a foundation of certainty. When you leave a job, you don't want to look back. So when we build a foundation, we have something that's guaranteed, a steady stream of income, where no matter what we do, that stream of income is sure. I like passive income investing as my primary real estate strategy because there's several benefits that come along with passive income or just owning properties as a whole. Let's talk about some of the benefits of investing for cash flow. Number one, you have a lifetime stream of income. As long as you hold onto that property, you collect income every single month for the rest of your life. And you can hand that down to your kids. And there's little to no work involved. If you choose not to get involved, you can hire professional property management, and there they will take care of your properties for you, and you pay them a monthly fee, which you can use it to write off on your return. With other strategies, it's constant work. You have to keep finding new deals to make more money. You're intending to buy the properties at a lower price, fix it up, and then sell it at a higher price and experience a profit. This is temporary income. It's one time. And if you want to make more money, you have to go out and find more properties. You have to find more people to sell the property to. It's still work. And you're getting taxed at ordinary income. You're not getting any tax benefits as you would with passive income. This brings us to our number two benefit, generational wealth. So when we talk about generational wealth, we talk about a tangible, physical asset that we own. Now with this physical asset, not only are you collecting cash flow every month, you can hand down this system to your children and to your children's children. This is a system that will last forever as long as you hold on to this property and not sell it. Why is this important? Let me ask you this. Have you ever gone to the bank or to a friend or family member to ask for a loan, to borrow money, only for them to say, "I'm sorry, I don't have it right now," or you decline? What about if you could use your own assets, family bank, this tangible asset that produces monthly income? What if you're able to just pull money from that to fund whatever you need to? College tuition, medical bills, starting up a business, family vacations, a new car, or whatever the case may be. Passive income provides for all of this. Just imagine the look on your child's face when they receive the gift of a house that produces passive income. Some of us don't know how we're going to pay for college, how we're going to pay that next bill, but why not relieve your children of that burden? Hand them down an income producing asset that they can use for a lifetime, so they'll never have to worry about anything again. This is generational wealth. Let's talk about tax benefits. With cash flow, passive income properties, that's considered passive income, and passive income is taxed at a much lower rate than ordinary income. Those of you who work and those who use other investment strategies like fix and flips. We're also able to take advantage of a lot more tax write-offs. Then we have depreciation, which gives you long-term tax savings. We have something called the 1031 exchange, which allows us to significantly increase our wealth and defer taxes for a later date. Means you can sell a property, not pay taxes, use those funds to buy an even greater property to collect even more cash flow. Normally, when you sell a property, you have to pay taxes on the gains. But then there's something called the cash out refinance. With the cash out refinance, it allows you to pull all the equity out of a property while you still keep the property and your tenants are paying down the mortgage. So I want to talk to you a little bit more about equity. So let me get into the cash out refinance. This is my first property purchased in June 2010. In this image, I break down the numbers for you. I have other videos posted about the numbers on this property if you have more questions, but I want to focus on the fact that I was able to refinance this property not only once, but twice. The first time I refinanced to get a lower interest rate, which reduced my mortgage payment and resulted in more cash flow. The second refinance was to tap into the equity and pull out $500,000 tax-free. I use these funds to purchase another cash flowing property. It's important to understand that each time I pull out the equity from the assets, the tenants help me to pay down the new debt. This is a wonderful and powerful system that I'll have for the rest of my life. In this next image, I purchased this property for $370,000 in 2015. I'm able to pull in about $100,000 every single year on this property. And over the past couple years, the value has gone up about $500,000. So it only makes sense to tap into the equity. I was able to pull out $577,000 via refinance. And of course, I used that money to buy another cash flowing asset. This is the power of the cash flow. And again, pointing it out, I'm not going to be the one that's going to pay down the debt. My tenants are going to help me to pay the debt down again. And I will then again pull more money out of it, and I'll keep doing that. Later on, I will hand this asset down to my heirs. Now let's talk about cash flow investing being recession proof. Cash flow passive income investing is one of those recession proof type investments. It's very low risk. I mean, once you close on a property, you immediately start collecting cash flow and recapturing your initial investment. And even during economic downturns and recessions, people still need places to live, which means we still collect cash flow no matter what. Cash flow passive income investing has allowed me to live with financial freedom. I use my time however I like because all my bases are covered. I use real estate as a foundation, so I can do what I want, when I want, and anytime I want. But I want you all to experience the same type of freedom, which is why I'm encouraging you to use real estate as a foundation, passive income investing. And you're getting taxed at a much lower rate, and you have to put little to no effort whatsoever in this type of investment strategy. So I encourage you all to strongly consider cash flow passive income investing. If you like this video, please support us by subscribing, liking, and leaving comments below. Also in the comments, if there's certain things you want to know about real estate investing or business, you can post your questions there and we'll make more cool videos to answer your questions. The videos get better over time, so hang in there with us.